Yes, people, a very, very happy evening to all of you. Thank you so much. So, guys, we are doing this chapter called as Inventories. Tell me, people, what have we completed so far? Types of inventories completed. What are the types of inventories? Raw material, work in progress, finished goods, stores, spares, loose tools, packing materials. Packing materials. Yes or no? Okay. Then we understood the meaning of inventory. What is inventory ka meaning? Inventory is asset held for sale or resale. Next. Exam is coming in 5 months. Identifiable? I'm asking meaning of inventory. Inventory is asset held for sale. Held for sale. Next. Held for further. That it is inventories are asset which are used in process of production of such sale. Third, inventory is asset which is in form of material or supplies which is used or consumed during the process of production or providing of services. Got it? Not got it? Okay. Then we understood the system of maintaining inventory. What are the two systems of maintaining inventory? Periodic inventory system and perpetual inventory system. Okay. Then we understood the methods of inventory valuation. Methods of inventory valuation. So using the system, you can derive the value of inventory. How do we get the value of inventory? Quantity multiplied by rate. Quantity, how do you get? In periodic, if you count it, you will get the quantity. By counting, you get the quantity. In perpetual, how do you get the quantity? If you maintain the record properly, goods comes inside, record it. When goods goes outside, record it. That way, in the book, I'll get to know the quantity. So, system of maintaining inventory will help us in getting the quantity. Rate, how do you multiply with the rate? This rate is nothing but cost or NRV, whichever is lower. Cost or NRV, whichever is lower. Now, we have to learn how to calculate the cost. We have to learn how to calculate the cost. Then we have to learn how to calculate the NRV. Then we have to learn why are we taking lower. Got it, not got it. So far, where are we now? We are at the cost stage. At the cost stage, we're trying to understand what is the formula for the cost. A lot of us, we think that cost means what? Purchase cost of the goods, inventories. No. AS2 has given altogether a different formula which will comprise of cost. Got it, not got it. So, coming back. This part I'm not discussing because we have already discussed. Maybe one more time when I do revision, this part I'll touch upon. Today I'm not touching this part. Is that okay? Okay. Inventory should be valued at cost price or NRV, whichever is lower. Now, cost price includes three things. So it is inclusive definition. Three things comprise as a part of cost of inventory. First is purchase cost. Second is conversion cost. Third is other cost. In purchase cost, how do you calculate the purchase cost? Gross purchase price. Gross purchase price. In case if you're buying in bulk, you will get a trade discount. So you have to add trade discount. We have to add trade discount minus trade discount. We will get what? Net purchase price. We will get net purchase price. By chance, this goods that you're buying is from abroad. You're importing goods up, you have to pay customs duty. So add customs duty. You'll get one value. Taxable value. On this taxable value, we will calculate GST plus GST. This is the final purchase price. Now, if the question says that the duty that you've paid and the taxes that you've paid is subsequently recoverable, means what? I can claim input, I'll get duty drawback. Means what will you do? Without forgetting, you will minus both of them. So minus customs duty minus input tax, ITC, input tax credit. I'll minus it. Then I'll get the balance value. But if the question says that on this ITC is not available, duty drawback is not available, then no need to minus, no need to deduct. Got it, not got it? Okay. To buy this goods, you will also have to incur some expenses, no? We call that as directly attributable cost. அதாவது இந்த பொருள் வாங்குறதுக்கு கட்டாயமா நீ செலவு பண்ணக்கூடிய amount is called as directly attributable cost. Example. Freight inward. Very good. Freight inward. Then this loading, அதாவது நீங்க டெல்லியில இருந்து goods வாங்குறீங்க. So it load in truck. So that loading charges, then unloading charges. Nothing pa. Remember what we studied in depreciation topic. What is comprising of cost of asset? Similar to that is this concept also. Yes or no? So loading and unloading charges. Then commission that you're paying on acquiring these goods. Agent commission. Yes, insurance. Very good. Insurance that you're paying for the in-transit risk. Yes or no? All this put together is called as, together, if you add everything, it is called as PC. Purchase cost. It is called as purchase cost. Got it? Not got it? So purchase cost includes all of them. Okay, wow, super. If at all you're in manufacturing, you have to incur an additional cost as conversion cost. Additional cost as conversion cost. What and all expenditure that you incur in manufacturing the product is called as conversion cost. So AS2 was given the formula for conversion cost. What is it? CC is equal to direct cost, which is labor cost. Labor cost. Labor cost. Directly, without paying labor, can I manufacture the product? No. So labor cost will come. Then SC stands for subcontracting cost. Subcontracting cost. What example I gave you last class? For the shirt, the logo that I fix, I don't do it in-house. I give it to some other party who's very far away, 50 kilometers away, that he remembers. So I send the shirt all the way to that particular shop. He gets that logo imprinted on my shirt and I get it back. So for every shirt, for every logo, I'm paying 10 rupees per logo. So that is my subcontracting cost, direct cost. Without this logo, can I sell the shirt or t-shirt? Not possible. So this is called a subcontracting cost. Okay, not okay. What happened to you? He shouted, no? I got scared. Oh my God. You guys, this is normal between those two donkeys. You don't get scared. Initially, I also got scared. Now I'm habitual to this. Then third one is fixed overhead. Fixed overhead. What is fixed overhead? Factory over. No, it's called as fixed overhead. Yes, factory rent, factory supervisor salary, etc., etc. That is called as fixed overhead. For example, I pay 1 lakh rupees as factory rent. 1 lakh rupee as factory rent. Okay, wow. This cost, should I allocate to this or not? Yes. How do we allocate it? Divide by number of units produced. Imagine I produced 1 lakh unit. So what is cost per unit? What is rent per unit? 1 rupee is a rent per unit. Got it? Not got it? That is called as fixed overhead. Means what? This 1 lakh rent will remain constant irrespective of what is your output going to be. Sometime your output will be how much? 2 lakh. Sometime your output will be only 2000. Got it? Not got it? So this fixed overhead will be constant. It will not change with the change in input. Got it? Not got it? Production marnalu seri, increase, decrease, or no change. Still this will remain same only. That is called as fixed overhead. Got it? Not got it? Then comes variable overhead. This cost will come into picture only when production happens. If 1 lakh units are produced, that much cost will come. If more units are produced, more will come. Less means less. So production mari cost will keep on varying. Those are called as variable overhead. Example is electricity. Factory electricity. The more machinery you run, more production you do, more EB. If you don't run machinery, no EB cost also. Got it? Not got it? Example I'm telling. All this put together is called as conversion cost. All this put together is called as conversion cost. Okay. Then comes OC. OC stands for other cost. OC stands for other cost. Either one thing which is particularly they have included is, if any special designing charges that we are doing, cost incurred specifically on inventory or for a specified customer. This product should be designed in this manner, should be packed in this manner. If any specific customer requirement comes, no, if there is a cost on that, that is part of your other cost. Got it? Not got it? All this put together is called as cost of inventory. Cost of inventory. So cost of inventory is equal to purchase cost plus conversion cost plus other cost. Any difficulty? Okay. Then what did we discuss? What should not be part of cost of inventory? Means what should be excluded from the cost of inventory. So we said that all the expenditure that we incur in the trading account, which is called as direct expenditure, should be a part of your cost of inventory. Apo, all the other expenditure which comes in a P&L, indirect expenses such as administration expenses, selling expenses, distribution expenses, finance cost, interest and borrowing, all this will not be a part of your cost of inventory. Got it? Not got it? Tell no. Okay. What is meant by cost of inventory? What is meant by cost of inventory? So this is that cost which we are incurring for the customer. உனக்கு ஒரு பொருள் வேணும், அதுக்காக வேண்டி நான் இது செலவு பண்ணக்கூடிய வேல்யூ இஸ் கால்ட் as காஸ்ட் ஆஃப் இன்வென்டரி. அப்போ உனக்காக இது செலவு பண்ண அப்படின்னா இது காசு நீ கொடுக்கணுமா கொடுக்கூடாதா? எஸ். ஸோ காஸ்ட் ஆஃப் இன்வென்டரி இஸ் தட் காஸ்ட் which businessman is incurring for their customer. Got it? Not got it? So this I will recover from whom? I will recover from customer. Of course, with this I'll add my profit margin. I will add my profit margin. Why am I adding profit margin? Because I'm doing a lot of efforts for you. For that efforts, the profit has been charged. Got it, not got it. So what is the selling price ka formula? Cost price plus profit. Cost price is that price which I'm incurring for the customer. If I'm not doing any work for the customer, this cost will not come. So this confirm I need to recover from whom? Customer. Along with that, since I'm putting efforts for you, I have to charge my profit also. Yes or no? Okay. My question to all of you, this admin expenditure, selling expenditure, distribution cost, interest and borrowing, is it for the customer or is it for your convenience? It is for the business convenience. Got it, not got it. To manufacture this pen factory is sufficient. But I've opened one head office near airport for my convenience. Got it, not got it. I'm doing marketing. Why? So that I can get more customers. For that, I'm doing extra expenditure. Got it, not got it. So this expenditure, you cannot put on the head of customer. You bear it. You means who? Business will bear it. How will the business bear it? From where the business will bear it? Your profit charge பண்ற பாத்தியா இந்த ப்ராஃபிட்ல நீ வந்து அட்ஜஸ்ட் பண்ணிக்கொண்டான் நீ ப்ராஃபிட் earn பண்ற பாத்தியா அந்த ப்ராஃபிட் earn பண்ற பாத்தியா அதுல இருந்து இந்த செலவெல்லாம் பண்ணிக்கொண்டாங்க got it not got it tell no now you will tell sir in that case profit also is recovered from customer only no sir correct நீ admin expense selling distribution interest எல்லாம் அதிகமா போட்ட அப்படினா ப்ராடக்ட்டோட விலை அதிகமாயிடும் so when somebody is selling the product at a cheaper price by adding admin expense, selling expense, interest, don't you think your selling price will become very high? For example, in the pen, this pen, this is a digital pen, which I'll get for 100 rupees in market. So what is the market price of this pen? 100 rupees is the pen. Okay, wow. Now, my cost price is how much? 70 rupees to manufacture this pen. அதாவது இந்த பென் மேனுஃபேக்சர் பண்றதுக்கு மட்டும் how much it is? 70. So this pen, at what rate if I sell, I'll get the orders? Maximum 100. In 100 மேல நீ காஸ்ட் போட்ட அப்படின்னா selling price போட்ட அப்படின்னா nobody will buy from you. They'll buy from somewhere else. So what is the profit margin that they can maximum allot? 30 rupees. அப்ப இந்த 30 ரூபாய்க்குள்ள தான் இது அத்தனை செலவு நீ பண்ணணும். Got it, not got it. Hence, this is not a part of your cost price. This is a part of your profit. Got it, not got it. Hence, all these items are excluded from cost of inventory. Clear or not clear? Okay. So admin expense, selling distribution, interest, borrowing cost, all these are excluded from cost of inventory. However, they said if any interest expense is incurred on WIP, semi-finished goods, that will be a part of your cost of inventory. What example I gave you? Now, you are into wine manufacturing. So wine-க்கு வந்து ஒரு process இருக்கு. You have to store that for a longer period. 1 year, 2 year, 3 year, 10 year, 50 years store பண்ணணும். அதை ஸ்டோர் பண்றதுக்கு வந்து you need a big space. You need to store it for a longer period. For that big space, you have taken a area. சரி அந்த ஸ்பேஸ் எடுத்திருக்கீங்க. பட் அதுக்கு வந்து உங்ககிட்ட காசு இல்லை. So for that, you have taken a loan. And for that loan, you're paying interest. And this loan is taken specifically for that storage of wine. Got it, not got it. அப்போ storage of wine is a conversion process or not? And the wine store பண்றோம் இல்லையா இது யாரோட process பா? This is a part of your manufacturing. It's a manufacturing process. Yes or no? So for the manufacturing process, if there is any interest taken, if any loan is taken and further if interest is paid, that interest can be added to the cost of inventory. But here they're telling interest should not be added to the cost of inventory. So which interest are they talking about? They're talking about the general business loan. நீ business காக வேண்டி நீ லோன் எடுக்கிற பாத்தியா the loan which is taken on the whole for the business. For that, if you're paying any interest, that should not be a part of your cost of inventory. If the loan is taken specifically for the manufacturing process, got it? Then in that case, I can add the cost of inventory, add the interest to the cost of inventory. I can add the interest to the cost of inventory. Got it, not got it? Tell no. Okay. B point. A and B are pending, which I have to discuss today only. CDE was discussed in the last class. Now, what is point number B saying? Storage cost should not be included in the cost of inventory. Storage cost will come where? இதெல்லாம் ஸ்டோர் பண்ணிட்டு காஸ்ட் வரும். Sir, to store raw material, I need warehouse. So rent of warehouse for storing raw material. Rent is coming. Rent for warehouse, which is for storage. Yes or no? I need warehouse for storing which all items? Raw material. Then semi-finished goods, then finished goods. So they're telling that to store raw material, to store semi-finished goods, if there is any rent incurred, storage cost incurred, this can be a part of your cost of inventory. Got it? Not got it? This is a part of your manufacturing. It's a part of your manufacturing. இது வந்து cost of inventory வந்துடலாம். But once the asset is ready for use, FG என்னது? Asset is ready for sale. Once the asset is ready for sale, அதுக்கப்புறம் அதை ஸ்டோர் பண்றதுக்கு வேண்டி நீ வந்து கோடவுன் எடுத்தீனா அதுக்கு ரெண்ட் கட்டினா that is not a part of my cost of inventory. So this storage cost is excluded from your cost of inventory, whereas this storage cost is included in your cost of inventory. Got it? Not got it? So they're telling that storage cost should be excluded from calculating cost of inventory unless those costs are necessary for further production. So raw material storage cost is necessary for further production. Semi-finished goods storage cost is necessary for further production. So that can be taken as cost of inventory. But FG or storage cost will not be a part of your cost of inventory. The storage cost of FG to be excluded from the cost of inventory. But the storage cost of raw material WIP should be included in the cost of inventory because this is necessary for further production. Any problem? Any problem? If I ask question, what are you supposed to do? Answer. I want a loud answer. Any doubts? Now, I only have one more item to discuss with all of you. This is little technical, so please pay full attention. High chances that question can come from this segment. Please concentrate. Very, very, very important. Cost of any abnormal waste, that is abnormal loss, should not be included in calculating the cost of inventory. Got it? Not got it? Now, listen to me very carefully. What is this? BPCL. தெரியலையே. BPCL. What is BPCL? Bharat Petroleum. Okay. அப்படியே வச்சுக்கலாம். Bharat Petroleum. BPCL, you don't know? Petrol bunk. Can you tell me the name of the petrol bunk? I use Indian Oil. Very good. Indian Oil. Then HP. Then BP. Yellow color, blue color. You remember that logo? This is BPCL. What is this? They have big reservoir for petrol. Big, huge tanks for petrol. Okay, va? Sir, why are you drawing all this, sir? Because we are into business of buying and selling petrol. All of us put together having one petrol bunk. Okay, va? So from BPCL, we are buying petrol to sell. Enna maachu? Any problem? No problem, no. Comfortable, no? AC swing பண்ணமா? Now, so what is the red light? बस कोई नहीं समझ जा, सब सिलेंडर के लिए. Petrol. What is this? Petrol. BPCL is based out of Delhi. Hello, Delhi. We are having petrol pump in Coimbatore. Okay. My simple question to all of you. Show. Driver is come. He's gone for tea. Wait, he'll come. Now. We are into business of buying and selling petrol. In the tank வந்து பாத்தீங்கன்னா there are in total 11,000 liter of petrol. Each costing 100 rupees. Okay, not okay? Okay. There is one particular feature of petrol, phenomenon of petrol. What is it? Evaporation. You know what is evaporation? It'll go. Now listen, we have purchased 11,000 liters of petrol, each liter costing 100 rupees. So what is my total cost? 11,000 into 100 is equal to 11 lakhs. This is the purchase price of the petrol. Yes or no? Now, for convenience, I'm telling, don't get too much excited or don't exaggerate this issue. For convenience, I'm telling that 1,000 liters became bus. Swaha. Got it, not got it? Hell no. So minus, okay. This evaporation of petrol we call it as normal loss. What do we call this as? Loss தானப்பா. அந்த 1000 லிட்டர் பெட்ரோல் போச்சு, யாரு கொடுக்க முடியாது. Got it, not got it? So it is called as normal loss. How much liters? 1,000 into 100. How much ka loss? 1 lakh is the normal loss. Okay. Okay. How many liters in effect you're getting, receiving? 10,000 liters. Yes or no? 10,000 liters in effect net you are receiving. Okay, wow. My simple question to all of you. How much will you charge to your customer? Imagine we are doing social service. What are we doing? Social service. What is the service? We are buying the petrol at the cost and selling at cost. No profit margin. Got it, not got it? So we are doing one social service. வாங்குற பெட்ரோல் என்ன காஸ்ட் வாங்கிருக்கணும் அந்த காஸ்ட்ல விற்க போறேன். Got it, not got it? So what is the cost that you will recover from your customer? Very good. Deep Chopra says 100. Oh, fight. I'm okay. You guys can debate. I have no problem. Debate. அடிதடி நடந்தால் கூட எனக்கு ஓகே தான். 110. Oh my god. Okay, so one student said, sir, we'll multiply by 100. One more is saying 110. 120. Very good. He's pakka businessman. He's telling in social service also we'll earn profit. 120. 101. Very good. 101. Oh, four options I got. Leave it. Other serious, on serious note, please tell me, what is the cost that you will charge from the customer? 111. Okay, one more option. Okay. Okay. 1019. 111. Okay. Tell me, people, what is the cost that you'll recover from your customer? Okay. Others. Okay. How many of you say that 100 will be charged from your customer? Raise your hands. Raise your hands. Deep Chopra alone. Okay. Others. My simple question to all of you. Okay. You are selling 10,000 liters of petrol at 100 rupees. So from your customer, how much are you recovering? 10 lakh rupees. When you purchased it, what is your purchase cost? 11 lakh rupees. So நீ 11 lakh ஒரு பொருள் வாங்கியிருக்க, 10 லட்சம் வித்திருக்க, 1 lakh நஷ்டம். அந்த நஷ்டம் நான் எடுக்கணுமா அது? Is it because of my ignorance? In the loss 1 lakh ஆச்சு இல்லையா? Evaporation. Is it because of my ignorance? No. It is not because of my ignorance. It is inherent nature of petrol that will evaporate. Whether you do business or I do business or even Ambani does business, petrol will evaporate. If Ambani does business, will petrol say, no, I will not evaporate? Hell no. No, it will evaporate. So, what is normal loss? Normal loss is that loss which is the inherent nature of the business. Because of the inherent nature of the business, the loss is prone to happen. Nobody can stop such a loss. That loss is called as a normal loss. Are we going to bear the normal loss? Are we going to bear the normal loss means I am going to bear it from my profit. Will I bear that loss from my pocket? From my profit? Hell no. No, I will not bear it. I am doing this business for whom? இந்த 10,000 லிட்டர் பெட்ரோல் வாங்கினேன் இல்லையா, யாருக்கா வாங்கினேன்? நானு உனக்கா நான் வாங்கினேன், for public. So for you have taken this much cost. So ultimately this cost what I incurred, 11 lakh rupees, from whom should I recover? Angel, from whom should I recover this money? Full 11 lakh rupees I need to recover from customer, because this business I'm doing only for public, for customer. Hence, the burden of the normal loss I will put on the head of customer. Got it? Not got it? So you will charge full 11 lakh rupees from the customer by selling 10,000 liters. So what is cost per unit? 110. 110 is your cost per unit. Had the loss not happened from the customer, you'd have recovered only 100. But because of the loss, you're recovering extra 10 rupees from the customer. So customer or the burden has increased or not? Yes. This will happen only in case of normal loss, because normal loss is such a loss which is happening because of the inherent nature of the business, because of the inherent nature of the product. So whether you do business or I do business, the loss will happen. Such a loss, we have to shift it on the head of the customer. We will not bear that loss. We have to shift that loss on the head of customer. Got it? Not got it? Okay, ba. So normal loss, will it be a part of your cost of inventory? Should normal loss be a part of cost of inventory? Yes. What is this 110? Cost of inventory only, no? நீ வாங்கின 10,000 லிட்டர் ஒண்ணுமே விக்கல. அப்ப இயர் எண்ட்ல எவ்வளவு இருக்கு? Full 10,000 liters are there. So this is your cost of inventory. Got it? Not got it? So normal loss, which is there for the business, is a part of your cost of inventory. Clear or not clear? Any doubts in this? Any problem online people in this? Logically the doubt irka. This has got continuation in the CA inter also. So if you're not getting this answer correct, you'll have trouble in intermediate. In the topic the doubt irundha solunga. All if you're comfortable? Okay. Imagine this is not a normal loss. Means what? This 1,000 liters of petrol which got evaporated, or let's say which has got lost, is not because of evaporation. Somebody has stolen it. Theft has happened. No evaporation. Why? Because the container in which I got the petrol is designed in such a way that evaporation cannot happen. Such a kind of technology we have found out. So no evaporation in this petrol. Like that, assume. For assumption, no cost, nothing, no? Okay, assume that. I'm telling you, this entire 1,000 liters of petrol that you lost, no, it is because of theft. Somebody has stolen the petrol in transit. Got it? Not got it? Now my question remains the same. And such loss of 1 lakh rupees is called as abnormal loss. What is abnormal loss? A loss that is incurred by the business because of ignorance, negligence of the business. Got it? Not got it? That is called as abnormal loss. Now this question remains the same. What will be the recovery price from the customer? I am selling 10,000 liters of petrol. Now how much money should I recover? How much money should I recover from the customer as cost? 100 or 110? Very good. Now it is 100 only. So how much will I recover? 10 lakh only. But sir, we incurred 11 lakh. No sir. You recovered only 10 lakh. No sir. Then what happens to this 1 lakh? You will bear. You na yaar, business will bear it. Because this happened because of your negligence. You should have ensured that such a theft is not happening, or you should have taken insurance against such theft. So because of your negligence and ignorance, such a loss is incurred in the business. Got it? Not got it? That loss you will not put on the head of customer. Then who will bear the loss? The customer, sorry, the business will bear the loss. How? From your profit. From your gross profit, you'll bear it. Got it? Not got it? So now this abnormal loss, will I include in the cost of the inventory? No, we have to exclude it. Got it? Not got it? In the previous scenario, what was the cost price of the inventory? 110. 110. Normal loss will be a part of your cost of inventory. But will abnormal loss be included? No. So this 10 rupees there, no? 1 lakh divided by 10,000 liters. What is cost per liter? 10 rupee. Am I right? What is 1 lakh? Abnormal loss. Got it? Divide by 10,000 units. Adadi, the loss is for the entire 10 lakh. Adadi, you guys are getting confused. Now, 1,000 liter is lost. 100 is what? Cost price per liter. So what is the total loss? 1 lakh. Total loss is 1 lakh. Now, had this 1 lakh been normal loss, what do? You allocate such loss to the entire inventory. What is the total inventory? 10,000 unit. So what is normal loss per unit? 10 rupee. Got it? Not got it? So cost price is 100. Normal loss is 10. So 110 is what? Total cost of inventory. What is 100? Cost price. What is 10? Normal loss per unit. So this is what? Cost price per unit. Got it? Not got it? So what is loss per unit? 10 rupee. So this 10 rupee is added to the cost of inventory, provided this loss is normal loss. Provided this loss is normal loss. But இதே 10 rupee வந்து பாத்தீங்கன்னா, if it is abnormal loss, will you put the burden on the head of the customer? No. So it will be excluded from your cost of inventory. Abnormal loss will be excluded from cost of inventory. Got it? Not got it? What if you try to add? It'll be wrong. AS2 does not permit it. Guys, he's telling if I add that also in the head of the customer and recover it, can anybody stop me and put me in jail? Nobody will put you in jail. Nobody can put you in jail. But if I come as an auditor who's auditing your balance sheet, and if I see you doing this, I will qualify your audit report. And qualify doesn't here means pass. Qualify here means there is some problem in the business. I'll report it. What market price? No, let's not go that much into deep. I'm just trying to explain from the cost point of view. Ye wala. So I'm just telling from the AS2 perspective, what does law says? Now, in reality, in the business scenario, there's a lot of permutation combination. So if the selling price goes up, it comes down, if it's fluctuating, all that is not the discussion point here. If I go too much in deep, then it becomes interclass, not foundation class. At the foundation level, this much part has been covered. This much in this, if you have any doubts, please ask me. कुछ doubt इसके अंदर है? नहीं है. Can I continue? So cost of any abnormal wastage of the material is excluded in calculating the cost of inventory. Got it? Not got it? Tell no. Online people, tell no. Now here, the burden of cost of normal loss. In our example, what is the burden of normal loss? So total loss is 1 lakh. Total loss is 1 lakh. How to get this 1 lakh? It's 1,000 liter petrol evaporated. Each of the cost is 100. So my total loss is 1 lakh. In the 1 lakh loss one day, from how many units can I absorb it? Can I recover it back? Evlo petrol with in the 1 lakh recover panna? 10,000 liters of petrol. So what is your loss per liter? Sorry, what is your loss per liter? Yes, 10 rupees. So this is called as normal loss per unit. Up 100 rupees another cost price. Plus normal loss is how much? 10. So what is your total cost? 110. So the burden of the normal loss 10 rupees shall be allocated, means what? Added or apportioned over the remaining inventory. Yes or no? How do I get this? 1 lakh is a loss divided by remaining inventory is how much? 10,000. Got it? Not got it? This remaining inventory comes after minusing normal loss. 11,000 liters I purchased. In that 1,000 liter is normal loss. So what is your purchase after that? Remaining inventory 10,000. So the normal loss of 1 lakh is apportioned, means what? Divided over the remaining inventory, which is 10,000, which will result into increase of cost from 100 to 110. But whatever practically I discussed, theoretically you're able to understand this now? You're able to visualize it? Okay. However, this 10 rupee is not apportioned or shifted. The burden of this is not shifted of, what is the language? However, it's not appropriate. Okay. It's not appropriate to shift the burden of cost of abnormal loss of the remaining inventory, and therefore it should be treated as business loss. So in case this 1 lakh loss is not a normal loss, it is a abnormal loss. That burden don't shift on the head of customer. Instead, treat this as business loss and deduct from your profit. Bhavish, I'm here, not there. Here. Any problem so far? Based on this, can we do question? Online people, based on this, can we do one question? Is this question there in your? I don't think so. It is there in your scanner. Can somebody take a photo of this and put it in the group for your reference now? Any one person do it. This will come as a part of your theory. Any one person take it and put it in the group. Any one person. Done. Taken. Hitanshu is taken. Now it says that ABC Limited purchased raw material of 1,20,000. Shush. ABC Limited purchased raw material of 1,20,000. The following information is additionally provided. What is the requirement? Calculate the value of inventory as per AS2. Value here means, please make a note, cost. Actually, value means what? Cost or NRV, whichever is lower. In this question, we are not going to calculate the value. Rather, we are calculating the cost of inventory. Got it? Not got it? ABC Limited purchased raw material 120. So what is this called as? Purchase price. Okay, not okay? Okay. Trade discount received from the supplier is 10,000 rupees. What should I do with this trade discount? Minus from your gross purchase price. GST paid on purchase. ITC available. So first you will add 6,000. Since ITC is available, minus 6,000 later. So two choice. Add 6,000 because of tax and minus because of ITC. Or what you do? Make it zero. Nil treatment for this. Okay, wow. Both are accepted. Freight invert 4,000. Freight inward 4,000. Inward means what? For purchasing the raw material, the transportation charge is 4,000. So this is a part of your purchase cost. Purchase cost. Which cost? Purchase cost. Outright duty, non-refundable. Any kind of duty. Outright duty is not customs duty. It is basically an old duty which is applicable, which is not applicable in present. Other the Palaya duty, which is there long back. Now it has been abolished. It is non-refundable. So what do you do? Any kind of taxes and duty you will add it if it is non-refundable. Loading, unloading charges at the factory gate. What are we loading, unloading? Raw material. So this is called as directly attributable cost. Yes or no? Okay. So which is my directly attributable cost? This is my DAC, attributable cost. And this is my DAC, directly attributable cost. Okay, not okay. Then comes factory rent, 15,000. Factory EB, 10,000. This is a part of your CC, conversion cost. CC, conversion cost. Salary to the production supervisor. Salary to production supervisor. CC, conversion cost. Depreciation on machinery used in production. This is also part of your conversion cost. Storage charges for the raw material before production. Storage charges of the raw material before production. Before production. Okay, first of all, can I take it to the purchase cost? Is the storage cost a part of purchase? No. This is the storage charges of raw material before conversion. Appa enge pogum? Other cost. This will go to other cost. Purinjada. Sir, had this been storage charge of WIP? WIP is a part of production. Appa under storage enge pogum? Conversion cost. Got it, not got it. Are you able to apply your mind? Sir, adala okay, sir. Depreciation. Sir, depreciation also is nothing but cost of using machine, no? Independent manufacturer, I've used the machine. Other cost, will I not recover from the customer? I have to recover from the customer. So I will take into consideration. Yes or no? Okay. Rent of the finished goods warehouse. Which cost? Purchase cost, conversion cost, or other cost? Which cost? Oh my God, this is excluded. Rightly said. This is not a part of your cost of inventory. It is excluded from cost of inventory because it is for finished goods. Very good. Advertisement expenses for the new product. Excluded. This is selling expenditure. Excluded. Design cost for the special product for the client. Other cost. Very good. Quality inspection cost of raw material. Quality inspection cost of raw material. Quality inspection is a process part of your conversion cost. Because if this is not done, this item will not go to the production department. So here with this, the production process begins. Okay, not okay. Administrative salary. Exclusion, donkey fellow. Exclusion. Labor charges for the manufacturing. Excluded, sir. Conversion cost, which is direct labor, direct cost. Okay. Calculate the value of inventory as per AS2. Okay, wow. Now, this I'll give as homework. Question read, no? Can we see the answer also? Okay. 120 is your raw material. Any problem? I'll just show the answer. Shh. Take this as homework and do by yourself. Okay, wow. By reading the question and giving the answer, 50%, 60% you understood. By seeing the answer, 40% more you'll get a clarity. Okay, wow. Rest of the question, take it as homework. Raw material is the basic purchase price minus trade discount. In that, add freight, directly attributable cost. Add or try. It is duty, tax, non-refundable added. Add loading, unloading. It is a directly attributable cost. GST add panla. On this, input is available. So, mottama ignore pantanga. But if you're ignoring that way, you have to give a note. You have to give a note of it. Okay, va. Illa nena panno. Add panni, minus panno. Both is your choice. Clear or not clear? Yes, ma. Which one? Yeah. I always tell it is better. Don't do net. Add and minus. That's better option. Always. That is better option. Lagta hai. So I have question based on that also. I'll do it. 1 second. Yes, ma. Right. Okay, we'll do with one numerical. Okay, can I finish this part and come to your question? Okay. So both of your questions, I will answer it. My suggestion is always add duties and taxes and then minus it. That is better. In this question, what happens? The problem what these two boys are saying, no, that is not there. That's why I did net off here itself. Got it, not got it. But in reality, it is always better to add all the taxes and GST, then separately subtract it. That is what you're supposed to do it. In Inter, we have a little bit more questions of what you are asking. At foundation level, they've not screwed up that much. But anyways, I'll answer your queries in some time. So this is called as net purchase cost. So why are we adding all that? Reasons have been provided besides. Any problem in this? Any problem in this? No problem? Okay. Then labor charges, factory rent, factory EB, production supervisor salary, depreciation, all is a part of your conversion cost, which I've added 53,000 rupees. Any problem in this? Tell no. Any problem in this? No. Then we said raw material storage cost is a part of your other cost because it does not fit in purchase cost, because storage cost is not necessary for purchasing raw material. So it will not come in purchase cost. What is purchase cost? That cost which is incurred for buying material, either raw material or goods, stock and trade. This storage is not necessary for buying the raw material. Got it? Not got it? And this is the cost before production. So this cannot be conversion cost. Up in the cost, other cost. Hence I put it here. Any problem? Next, design cost is a part of your other cost. Quality inspection cost is a part of, now here they have put in other cost. Even if you put in conversion cost, no problem. Because in exam, there is no separate mark for purchase cost, conversion cost and other cost. On the whole, you will get the mark. On the whole, for this, you'll get the mark. Got it? Not got it? There are some items which you can debate whether it should go to conversion cost or other cost. There are items you will have a debate on that. So we will not debate because ultimately ICA is not giving you marks for this classification. Whether this is going into inventory or not is what is a debate here. Purinjada? So debate can come whether the item should go to CC or OC. That you have complete freedom. You can decide. So here quality inspection. Some places they are putting where? In the conversion cost. In some places they're putting in other cost. You can put wherever you want. No problem on this point. Okay, not okay. So I'm getting what? In total cost of inventory, which is purchase cost plus conversion cost plus other cost. All put together 1,82,000. Any problem? This is your cost of inventory. Imagine I have in total 1,82,000 pieces. So what is the cost of inventory per unit? 1 rupee is the cost of inventory per unit. Got it? How to get the cost per unit? Have you got it? Tell no. What is excluded? Since GST ITC are available, they have excluded. But in reality, what it is supposed to do? Add and minus it. Wherever they ask you to apply the GST on percentage basis, no. Always better to add and then minus it. Got it? Not got it? Rent of the finished goods is excluded from your cost of inventory. Ad expenses, admin expenses are excluded from your cost of inventory. Any problem? Easy one. No difficulty. So can you take this as homework? Okay. Example 2 we'll do right now. A Limited imported a product, chemical A, from USA for $10,000. It is in dollars, $10,000. When the rate of exchange was 80 rupees per US dollars. Where am I buying from? USA. I have to pay them in what? INR or dollars? I have to pay in dollars. In your pocket, do you have dollars? No. How will you make the payment in dollars? Sir, I will buy dollars, then I'll pay, sir. From where will you buy the dollars? From the authorized dealers. Authorized dealers. Example, Forex. Or Forex basically is held by whom? Banks. Banks are the authorized seller. So, நீ abroad போற, foreign tour போற அப்படினா உனக்கு டாலர் வேணுமா? Go to bank and get it from there. If you want to make any payment to the party sitting in abroad means you have to purchase dollars. $10,000 you have to purchase. From where will you purchase? From authorized dealer, which is supposing to be bank. How will you buy? How you buy a product? No. In the same manner, you have to buy the dollars. So this remote ka price is 100 rupees per piece. I want 10,000 piece. So what is my total cost? I want to buy the remote. How many remote? 10,000 remote. Cost per remote is 100. So multiply by 100. In the same manner, how many dollars I want? I want $10,000. What is cost per dollar? 80 rupees is cost per dollar. Up from your pocket, what is the total money that you have to pay? 8 lakh rupees. Got it? Not got it? Tell no. Tell no. This 8 lakh is called as what? Gross purchase price. What is it called as? Gross purchase price. A Limited imported a product from USA for 10,000 when the rate of exchange is 80 per US dollars. Supplier gave a discount of 5% on it. So on this $10,000, we've got a discount of 5%. What discount? Trade discount for bulk purchases. It charged 8% GST whose credit is not available. ITC not available. A Limited paid import duty of 20,000 when it reached India. Any problem? Freight and insurance was 1 lakh rupees. Total quantity imported was 2,000 liters. 2,000 liters. What is this $10,000? $10,000 is the gross purchase price for the entire goods that I'm buying. What am I buying? I'm buying some chemical which is coming in liters. How many liters I'm buying like that? 2,000 liters I'm buying. Any problem? No problem. A Limited expected a normal loss of 3%, which means what? Whether you buy chemical, I buy chemical, or A Limited buys the chemical, since this is coming from abroad, because of not handling the chemical properly, 3% ka loss is normal. Hence, it is called as normal loss. Okay, not okay. But in fact, the company has received only 1,900 liters. Got it, not got it. A Limited paid an expenses of 40,000 for insulating chemical. And the chemical one there, it is coming from USA, no? So you have to insulate it well, other pack it well. In simple language, tell me people, how many of you like rasgulla? How many of you like rasgulla? Correct, no? Oh, Sangameka from there, she's raising hands. Rasgulla, right? Now, let's suppose you have one relative who's sitting in Delhi. You're telling that, please send me 1 box of rasgulla. Yes or no? And that is not coming in tin. It is not a rasgulla of any branded company. It's a rasgulla that has been made by the local shopkeeper of Delhi. So he will not pack and give like that. Like how he's giving the sweet box to other people, no? Like that he will give it to you also. But if such a kind of packing is been done and sent in courier, what will happen? Everything will spill. So such an item like rasgulla, which has got a lot of what you call liquid into it, yes, you have to do some special packing. And the special packing is what they're talking about. In the chemical வந்து நல்லா pack பண்ணி insulate பண்றதுக்கு additional packing expenses incurred for 40,000 rupees. Apart from that, there is a specialized packaging for which you have spent 50,000 rupees. Go down rent is 80,000. Calculate the cost per unit for material as per AS2. So Hitansh and Prasad wanted this question, no? So for you, this question has been presented. Who will do it? All of you will do it? Okay, do it. I'm giving you 2 minutes of time to do this. Fast. If you try to do on calculator, no, you'll not get it. So please do it in the paper, notebook. Do it. Don't ask, don't discuss, no discussion. You do it on your own. No discussion, no discussion. Once again, I'm just, guys, go down rent for FG போட்டுருங்க. Go down rent for FG it is. Do it. It's basically kind of a special packaging that is done for the purchase of raw material. मतलब केमिकल को अंदर से इंसुलेट करने का एक कॉस्ट है, उसके बाद स्पेशल पैकेजिंग. Both are expenditure which is necessary for buying the raw material. Like that you think. Done? You're asking cost per unit, not the total cost. Cost per unit. Cost per unit. About total cost should be divided by number of units. My question to all of you, this 8% GST who's charging? India or USA? Oh, oh. எவன்பா பொருள் விற்கிறான்? USA தானே? அப்ப விக்கிற கண்ட்ரிக்கு தானே GST வரும்? Sir, GST is there only in India, no sir. Who said? Who said? GST concept is applicable abroad also. Say give up, I'll do it. Sir, we give up, sir. No give up. Okay, do it then. What for me? Huh? Kapil Sharma show. What? हाँ बहुत देखो. ये कौन सा? Give up. Okay, chalo, great. Now, guys, A Limited has imported a product chemical A. How many liters? They've given order for 2000 liters. இதுக்கு மொத்த காஸ்ட் எவ்வளோ? 10,000 rupees. We will call this as gross purchase price. How much? $10,000. This is for how many liters? 2000 liters. Any problem? Tell no. Concentrate. I want all of you to keep your pens down. Please concentrate. Since you've done a bulk purchase, he has offered you a discount of 5%. Supplier gave a discount of 5% on it. So minus trade discount 5%. How much people? $10,000 into 5%. So it is 50, yeah. 500. Huh? Okay, she's telling sir, we'll do it in INR. Why the hell will you do it in INR when all this drama is happening in USA? So net purchase price is how much? Net purchase price is how much? $9,500 for how many liters? 2000 liters. Any problem? No problem. Now, it charged 8% GST. It means who? Who charged it? The company which is sitting in USA. The selling company of USA has charged 8% GST. On that, credit will not be available. அவன் வீட்டு டாக்ஸுக்கு நம்ம கிரெடிட் கிடைக்குமா? கிடைக்காது. Got it, not got it. It charge means the selling company in the USA has charged as GST 8%. Like how when we sell the product, will we add GST or not while selling it? Yes or no? Same way, when he's selling, he will add GST to us. Clear or not clear? So add GST. How much? No, percentage. 8%. 8% GST. So on 9,500, 8% GST is how much? 760. Now what is the total? How much it is? 10,260. This is called as landing price or landing value. It's called as 10,260. All Intel will take care of. Now it is not required in foundation. All you need to know is this 10,260 is the net price which you have to pay. இதான் கடைசியா pay பண்ணக்கூடிய amount. Yes or no? We will call this as payable value. Landing value means what? At this value, the goods are landed. இதான் நீ pay பண்ணணும். Okay வா? Now you can convert this in INR. How much should you pay money? $10,260. You have to buy the dollar from bank. What is the rate per dollar? 80 rupees. So what is your purchase value in rupees? $10,260 multiplied by 80. This is called as purchase value in India. How much it is? 8,20,800. Any problem in this? Okay. Now, A Limited paid import duty 20,000 rupees when it reached India. Now, customs duty will be added. Add customs duty. Add customs duty. How much it is? 20,000 rupees. How much is total? 8,40,800. Now my question to all of you, the GST what you've paid, on that is there any input tax rate available? Any duty drawback? No. On this customs duty, any duty drawback is available? No, nothing mentioned means it is not available. Got it, not got it. So 8,40,000 rupees, sorry, 8,40,800. Okay, wow. This is your purchase price. Purchase price. We need purchase cost. So with the purchase price, what are we supposed to add? Directly attributable cost. Got it, not got it. So freight and insurance is your directly attributable cost. So with this add freight and insurance, how much it is? 1 lakh. Any other, any other, any other directly attributable cost? Directly attributable cost. No. Conversion cost is not possible because this is at the time of purchase. So conversion cost will not come, but other cost will come. Other cost will come. So this 40,000 rupees what you paid for insulating chemical and 50,000 special packaging, you can debate, sir, I'll take this to other cost, or you can debate it telling us directly attributable cost. I don't mind. Either ways you take it. Doesn't matter. Got it, not got it. Ultimately, this goes to a part of your cost of inventory. In examination, it is not important to segregate the cost into conversion cost, purchase cost, and other cost. For that, marks will not be allotted. Got it, not got it. Marks will be allotted whether you have considered in the cost of inventory or not. So with this, can I add insulating charges and special packing charges? How much it is, people? 40,000 and 50,000. Tell me, people, what is my total cost now? 10 lakh 30,800. This is your total cost? Total cost? Okay. Go down, I told you this is for finished goods. This is for finished goods is the what rent that they are paying. So this 80,000 will not be a part of your cost of inventory. Any problem? Is this what are they asking in the question? No, they're telling the requirement is calculate cost per inventory. What have you calculated? Total cost of inventory of calculated. I want per unit. Apana, this I should divide with. This I should divide with number of units. How much is that, people? Got it? You tell me no. How will I calculate number of units? Working note 1. Calculation of number of units. நீங்க ஆர்டர் பண்ணும்போது how many liters have you ordered? Quantity purchased is 2000 liters. Yes or no? In our example, petrol example, it was 11,000 liters of petrol. Yes or no? Tell no. Now, when you're buying this product, you knew that there will be a normal loss of 3%. அதாவது இந்த கெமிக்கல் யார் பை பண்ணாலும் 3% is a normal loss. Yes or no? So that should I minus or not? Yes. So minus normal loss. How much is normal loss? 2000 into 3%, which is how much? 600 or 60? 60, yeah. Okay. 60. So how many liters are you supposed to receive? 1940 you're supposed to receive. Ana, how much did you receive? Actually, this should have been received. You purchased 2000 liters of chemical. After minusing a normal loss of 60 liters, you should have got 1940 liters. But how much did you get? You got only 1900 liters. But what happened to remaining 40 liters? What happened to remaining 40 liters? Maybe stolen, maybe spilled. In handling, அதாவது அந்த கெமிக்கல் ஹேண்டில் பண்ணும்போது என்ன இருக்கும்? ஒரு பாக்கெட் உடைஞ்சிருக்கும், கொட்டி இருக்கலாம். Tell me, my simple question to all of you. Happening of normal loss is under your control or not? Happening of normal loss is under your control. Evaporation of petrol or non-evaporation of petrol is under your control? No. So normal loss is a loss which is beyond your control. That loss happens because of the inherent nature of the business or the inherent nature of the product. But abnormal loss is not like that. Abnormal loss could have been prevented had you not been negligent. Had you not been careless, it could have been prevented. அப்பனா உன் கண்ட்ரோல்ல இருந்திருக்கு, நீ கரெக்டா செயல்படல. You have not done it properly. So this abnormal loss will I minus, and the burden of it will I put on the remaining 1900 liters? Tell no. So my question to all of you, 10,30,800 இருக்கு இல்லையா? This is my total cost. When I divide by number of units, should I divide by 1940 liters, or should I divide by liters what you have received? Both options will do. Tell me, people. 10 lakh 30,800 divided by 1940. What is 1940? 2000 minus 60 normal loss. 1940. 5 531.340. Okay. And for the other one, 540 542.53. Okay. We'll do one more calculation. 10 lakh 30,800 is what total cost. Imagine there is no normal loss, there is no abnormal loss. நீ ஆர்டர் பண்ண 2.5 லிட்டர் ஃபுல்லா வந்திருந்ததுன்னா வாட் இஸ் யோர் காஸ்ட் பர் யூனிட்? 70 5.4. இது என்ன தெரியுமா? In our example, we purchase petrol for 100 rupees, no? This is that cost. 11,000 liters of petrol I ordered for 100 rupees. What is cost per liter? 100. Full 11,000 வாங்கிருந்தனா what is cost per liter? 100. In the same manner, this 515.40 is my cost per liter. Had I got full 2,000 liters? Yes or no? Now, in petrol example, that 1,000 liters were normal loss. So because of normal loss, cost got increased or decreased? In petrol example, 11,000 liters I purchased. In that 1,000 liter, abnormal loss. Sorry, normal loss. What is my remaining liters? 10,000. அதோட cost என்ன எடுத்திருக்கும் per liter? We took as 110 because the burden of normal loss we shift on the head of customer. So here also can I say, if I shift the burden on the head of the customer, it will increase. So cost increase ஆச்சு இந்த இடத்துல. 531.340 increased or not increased? Yes. Now, if you divide by 1,900, what happens, you know? You are putting the abnormal loss also in the head of customer. புரியுதா? If I divide by 1,900, you're putting the cost of abnormal loss also in the head of the customer. So your cost is further increasing. 542.53. From 531.340 to 542.53. Is it right? Can you shift the burden of abnormal loss on the head of the customer? No. So this is wrong. You divide பண்ணும்போது denominator, if it keeps on decreasing, no, your cost per unit will go up, increase. So the right number of units to be taken for the purpose of calculating cost of inventory per unit is 1940, which is coming after minusing normal loss. So here, when I divide the number of units here, no, this number of units should be always after normal loss. What should not be subtracted? Abnormal loss ka unit should not be subtracted. Got it? Not got it? Because if you subtracted 40 liters of abnormal loss, my remaining liters are how much? 1,900. So if you try to take the cost of this 1,900 liters, your price will further go up. It is as if you're shifting the burden of abnormal loss on the head of customer, which is not correct. AS2 does not permit it. Got it? Not got it? So what is cost per unit? Which is the cost per unit? 531.340 is the cost per unit. So total cost of inventory is 10,30,800. This is actually for 2,000 liters. But actually we had a normal loss of 60 liters. So what is the actual number of units we are supposed to receive? 1940. That is what we have to divide. So 10,30,800 divided by 1940. That is the cost per liter, which is how much? 531.34. Got it? Not got it? So total cost of inventory is divided by how much? 1940. What is 1940? That value which is coming after minusing normal loss. What are we not supposed to minus? Abnormal loss should not be subtracted. Got it? Not got it? If I subtract abnormal loss, my quantity will further decrease. So if I take the decremental units, then your cost per unit will further increase. That should not happen because the burden of abnormal loss should not be put on the head of customer. Any doubts here, Raghav? No doubts? Comfortable? Now tell me, do you have any problem? Any problem? Any difficulty? No difficulty? Okay. With this, we are done with the calculation of cost price of the inventory. So in the chart, I've given a summary. Cost price includes purchase cost, conversion cost, and other cost. Purchase cost is comprising of purchase price, duties and taxes, freight inward, and other directly attributable expenses minus trade discount if any, minus duty drawback or ITC. Okay, wow. Conversion cost is nothing but direct labor, which is nothing but including your subcontracting cost, then variable overhead and fixed production overhead. Other cost, you know what it is. All this put together is called as cost price of inventory. Cost price of inventory. In this, what are you supposed to exclude? That list I've given. Okay, not okay. Tell no. Okay. If this is clear, can I go to the next topic, which is called as net realizable value? How do you calculate the net realizable value? All of you people ready? Online people, are you all ready? One second, Gana. Hmm. 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 Can you give me your numericals? For example, let's say there's a gross purchase price. I'm converting in INR, okay? He's buying from abroad, okay? So let's say it is 10 lakh rupees is the gross purchase price. Any trade discount? No trade discount? Okay. Minus trade discount, 0. So 10 lakh is my net purchase price. Any problem in this? No. With this, what are we supposed to add? Since we are buying from abroad, we have to pay import duty in India. So customs duty is been added. Customs duty is, let's suppose, 10%. How much it is? 1 lakh rupees. This is called as taxable value or assessable value, which is 11 lakh rupees. Any problem? No problem. Plus, on this, sometime under reverse charge mechanism, you're supposed to pay GST. That's why this GST I've taken into consideration. Now, what is reverse charge mechanism? You'll understand only in the CA intermediate when we do GST. So, in reverse charge mechanism, normally what happens? Forward mechanism means what? Vikrama, seller will add GST and buyer has to pay GST. Purida. Who will charge the GST in the bill? Seller has to charge. In reverse charge mechanism, ulta will happen. Seller will not charge any GST. Buyer from his pocket, he has to add and pay to the government. Got it, not got it. So don't go too much into it. That is something which will be dealing in intermediate. Purida. But in case if they say Indian GST is being charged up Dina, then that GST will be coming on this 11 lakh rupees. Got it, not got it. So let's say it is 12%. So on this 11 lakh rupees, what is 12%? Tell me. 1 lakh 32,000 total. 12 lakh 32,000. Now, what is your query in this, Kana? Now, duty drawback is available. How much? Full available? Full available. So, this 1 lakh will be subtracted. This 1 lakh will be subtracted. What about GST input available for the GST that you have paid? No. So, your cost is going to be 11 lakh 32,000 is your cost of purchase. Correct. Now he's telling that, sir, if duty drawback is available, why did you add in the minus? Better what we do know, we will not add it here because by adding it, the taxable value went up, the assessable value went up, and because of that, your GST also is extra. இப்போ இந்த இடத்துல நீங்க வந்து purchase price is 10 lakh. நீங்க வந்து customs duty which is going to be refunded add பண்ணல அப்படின்னா then my cost would have been how much? Only 10 lakh. On 10 lakh, what is my GST? 1 lakh 20,000. So, enache 12,000 rupees extra GST has come. He's telling that when the duty drawback is available, then why are you adding? Better you don't consider that. No, you cannot do that because that is when you study in CA final customs duty, it is mandatory to add the customs duty to the cost of the product. By that virtue, your taxable value or assessable value has to go up. On that incremental price only, GST has to be calculated. So when you study intermediate GST, they will tell you the GST is calculated on the assessable value. And how does the assessable value comes? After adding customs duty. Got it, not got it. So what you're thinking is right, but that is not what law thinks. So I'm telling you what law says. Such questions I don't expect to come at the foundation level. So let's not go deep into it and confuse it. It is somewhere at the intermediate and final level. This will come, but not at the foundation level, but at the intermediate and final level. So let's not go into it. But since he asked the question, I felt as a teacher I should satisfy his query. Hence I've done it. Any problem? Okay. இதுல இது மட்டும் இல்ல, நீங்க இன்டர்ல வந்தீங்கன்னா same topic is there. Along with customs duty, I have additional customs duty. Additional customs duty. Now, additional customs duty on what should I add? I'll teach only intermediate, not in foundation. புரியுதா? இதுக்கு தவிர்த்து லொட்டு லொஸ்க்கு நிறைய இருக்கு, which we'll discuss in inter and final. So don't break your head too much. Keep it very simple. Which net off? ITC available means from here further I'll minus 1,32,000. Which net off? No. You cannot do that. I'm telling you, always this has to be done. In the previous question, even if you add and minus it, or if you don't do also, it is impact as net is zero. That's why we took shortcut in the previous question. Guys, what you're asking is, in the previous question, the example what I did, no? Here, this GST is there, no? 6,000. We never added because anyways we had to subtract it. So impact was zero. That's why we didn't consider it. And the Mari shortcut is applicable for such kind of question. Now, where the question says you have to calculate GST, when they give percentage apdina, you cannot do like this. Whenever the percentage is given and the question is asking you to calculate GST, always you will add GST and then later you have to minus it. Got it, not got it. புரியுதா? இந்த questionல வந்து பாத்தீங்கன்னா அவனே GST calculate பண்ணி கொடுத்துட்டான். So 6,000 add பண்ணி minus பண்ணா impact is zero. So to save time, I said don't consider and make it zero. In real life, 6,000 they'll not give you. You have to calculate 6,000. How will you calculate? By applying percentage. Upon the add panni da minus pannanum. Got it, not got it. Tell no. Now clear? Ab kya doubt hai tera? नहीं ले सकते, नेट ऑफ नहीं कर सकते. नहीं. Both you cannot take. Had they told here octroi duty is refundable, then I would have taken plus 2,000 minus 2,000. Net zero. In this question, net is allowed, is what I'm trying to say. Percentage पे वो problem आएगा बाबू, तेरे को इसमें problem नहीं आएगा. When it is given absolute value, it will not be a problem. This question is only given to make you understand. When the can I take this at the end? Is it okay? I'll take remind me at the end today. We'll do it. Let's not waste time for this. Listen. Shh. Listen. Now the next topic that I will discuss is NRV. NRV. What is meant by NRV? That is not meant. That is called as full form. NRV ka full form is net realizable value. What is meant by NRV? Meaning of NRV. Selling price. Okay. Book value in market. So basically market price you're saying. No. NRV is not equal to market price. For convenience you can take it, but NRV is not equal to market price. NRV is the value. NRV is the estimated selling price in the ordinary course of business less estimated cost of completion and the estimated cost necessary to make the sale. Now I'm telling, I'll explain. Patience. First point, NRV is not equal to market value. Market value is also called as MRP. இப்போ நீங்க ஒரு பொருள் வாங்குறீங்க, for example this phone if you buy, in that box there'll be MRP written, yes or no? Do you pay MRP income when you buy the mobile phone? Most of the product we don't buy at MRP, we always get a discount, we get at a different price. Got it, not got it? So what is NRV? The price which I receive, I'm a seller, the price which I receive by selling the product is called as selling price, which is not necessarily equal to MRP. அதாவது selling value will not necessarily be equal to your MRP. நீ வாங்குற பொருளோட MRP could be 10,000, but you might get it for 9,000. So it is not necessary that selling value should be equal to MRP. Got it, not got it? Selling value is 9,000. Any problem? Now, accounting standard 2 says that NRV is not equal to selling value also. They're telling that from the selling value, you're supposed to minus estimated selling price. Now, what is meant by estimated selling price? To sell this product, what is the additional incremental cost that you have to incur? Purida. That is called as estimated selling price. I'll give an example. Don't panic. I'm into business of buying and selling mobile phone. Okay, wow. I purchased the mobile phone for, let's say, 7,000 rupees. I purchased one mobile phone for 7,000 rupees. What is AS to saying that? AS to says that, imagine if this mobile phone is not sold, if it is inventory, how do you value the inventory? Cost price or NRV, whichever is lower. Okay, wow. Cost price is 7,000. Now, நான் வாங்கின பொருளோட மதிப்பு வந்து 7,000 ரூபாய். இதோட MRP எவ்வளவு தெரியுமா? MRP of this is 20,000 rupees. MRP of this is how much? 20,000 rupees. Got it, not got it. So can I take NRV as 20,000 rupees? No, because this is not the price at which I'm planning to sell. Then I'm asking, what is the value at which you're planning to sell? What is your selling price? I'm telling I'll sell this for 12,000 rupees. Got it, not got it. I'll sell this for 12,000 rupees. புரிஞ்சுதா? Okay. Sir, is this selling price your NRV? No. Now, to sell this product, I'm asking you a question. To sell this product, will you incur any additional cost? அதாவது இந்த பொருள் விற்கிறதுக்கு விற்பனை பண்றதுக்கு வந்து will there be any other additional cost? Incremental cost, which means what? That cost will come only if I sell. Otherwise, no. If such cost is there அப்படின்னா, then you minus that. You minus that estimated selling, not estimated selling price. Sorry, selling expenses. Estimated selling expenses. You minus it. For example, so this mobile phone, sell or after selling, I have to confirm give one cover free. I have to give one cover free of cost. Purida, which is costing me 1,000 rupees. So that you have to minus. And what is your balance amount? 11,000. So this is called as net selling price. Net selling price. This is called as NRV. This is called as NRV. This 1,000 rupees will I incur as expenditure if I don't sell it? இந்த பொருள் விற்கல அப்படின்னா இந்த 1000 ரூபாய் செலவு வருமா? வராது. Which means what? This 1,000 rupees expense is coming only when I sell. If I don't sell, no expense. If I sell, expense will come. If I don't sell, expense will not come. Got it, not got it. So நெட்டா இந்த பொருள் விற்கும் போது உன் கையில காசு எவ்வளவு வருது? 11,000 rupees. This 11,000 is called as net realizable value. Net realizable value. Got it, not got it. இந்த பொருள் வித்திருக்கேன், கையில 12,000 வந்தது. In that 1,000 I paid for giving free of cost. See, customer-க்கு இந்த mobile cover இருக்கு இல்லையா? This mobile cover is free for whom? Customer. But for shopkeeper, I have to buy, no boss. அதோட காஸ்ட் எவ்வளோ? 1,000 rupees. Got it, not got it. So இந்த மொபைல் ஃபோன் வித்தனால வந்து உனக்கு 1000 ரூபாய் நஷ்டமாயிருக்கு. ஸோ அந்த நஷ்டம் போக கையில் எவ்வளோ காசு வந்திருக்கு? 11,000 rupees. That is called as net realizable value. Got it, not got it. So selling price is called as gross realizable value. What is it called as? Gross realizable value. From that minus the estimated selling expenses, I'll get net realizable value. Got it, not got it. Which is how much? 11,000 rupees. In this 11,000 rupees, there are two components. One, 12,000 rupees is selling price. 1,000 rupees is my incremental cost. Incremental cost. This incremental cost will come into picture only if I sell. Otherwise, no. Got it, not got it. Then what is this cost? 7,000 rupees. This is called as sunk cost. What is sunk cost? நீ பொருள் வாங்கிட்ட, நீ வித்தாலும் சரி விக்காட்டியும் சரி, this 7,000 rupees is your gone cost. It's a sunk cost. Got it, not got it. So that 7,000 rupees, will I minus from the selling price? No. What I'm supposed to minus? To sell this product, what is the incremental cost that I have to incur? That only I take into consideration. Got it, not got it. So that cost you have to minus from your selling expenses and get NRV. That is called as net realizable value. What is it called as? Net realizable value. Come back here. NRV is estimated selling price in the ordinary course of business. What is my estimated selling price? Sir, MRP is 20,000, sir, but I'm selling this product at 12,000 rupees. Okay. To sell this product, are you going to incur any incremental cost? Yes. Upon that, you have to minus estimated cost of completion or estimated cost necessary to make the sale. Sir, if I do not give that 1,000 rupees ka cover, mobile cover, I cannot sell the product. அப்படி ஒரு கட்டாயம் இருந்துச்சு அப்படின்னா, that you minus. The balance will get no 11,000 rupees. That is called as NRV. Got it, not got it? Tell no. So NRV for finished goods and stock in trade. Estimated selling price of FG or stock in trade, which is 12,000 rupees, less estimated selling expenses, which is called as incremental cost of selling, 1,000 rupees. Sir, can you give me another example? Can you give me another example of the estimated selling expenses? Commission on sale. Means I have appointed an agent. That agent is saying that, sir, if I help you sell the phone, give me 1,000 rupees commission. So if he is getting me a customer, then only I have to pay that 1,000 commission. Otherwise, not required. Got it, not got it. Then next example, delivery charges. Delivery charges. For example, I'm in the business of buying and selling electronic item. AC வச்சுக்கோங்க. AC வந்து வித்தாதான் delivery charges will come. No, so many people say that you buy AC from us, we'll give free home delivery. Free home delivery is for the customer. But for me, shopkeeper, I have to incur the expenditure. No, that is called my estimated selling expenditure. So for selling the product, if the business has got any estimated selling expenses, you can minus that. And balance is called as net realizable value. Got it? Not got it? This cost is called as incremental cost. What is meant by incremental cost? This cost I'll incur only if I sell. If I don't sell, no cost. That cost I have to pick up. Purinjada? Market price is never equal to NRV because market price represents the selling price of the goods in the market on a particular date, whereas NRV represents the actual amount expected to be realized after deducting cost of completion or selling expenses. What is cost of completion? I've not told it. Keep it pending. புரிஞ்சுதா? MRP என்ன? இந்த பொருளோட டப்பால இருக்கிற பிரைஸ் தான் MRP. அதுல தான் விற்கணுங்கிற அவசியம் இல்லை. I can sell less than that also. So at what price I'm going to sell, that is called as selling price. And from that, if I minus cost of selling expenses, further expenses, I call that as NRV. Got it? Not got it? What is estimated selling expenses? Estimated selling expenses refers to the cost that are expected to be incurred to complete the sale of the inventory. And the பொருள் விற்கிறதுக்கு additional incur பண்ணக்கூடிய cost is called as selling expenses. These are incremental cost, which means they arise only when the sale takes place. No sale, no selling expenses. Got it? Not got it? No sale, no such expenses. So estimated selling expense include only post-sale or sale-related cost and not pre-sale expenses. Now understand this. What is meant by pre-sale expenses? What is meant by pre-sale expenses? I did one general advertisement. In my shop, whatever you buy, 5% discount. I did advertisement commonly for all the product. Got it? Not got it? After that advertisement, people may come or may not come. புரிஞ்சுதா? So can I call this as estimated selling expenses? No. Not got it? Not got it? This expenditure is not giving me confirm sale. It is a general expenditure. So these are called as pre-sale expenditure. The expenditure which is done before the sale is called as pre-sale expenditure. So marketing is done before you sell. Ad is done before you sell. Salary I give to the sales staff and pre-sale staff before sale is done. General selling overheads is done before sales. These are not directly linked to the specific sale. It is generally done for all the product in my shop. Hence, this will not be a part of your estimated selling expenses. But what is included in NRV? What is my estimated selling expenses? Only post-sale incremental expenses, such as if I sell the product, I have to give commission for that product to the agent. Delivery and transportation charges to deliver that particular product. Special packaging costs for that particular product. All these are called as post-sale incremental expenses, which is called as estimated selling expenses, which has to be subtracted from your selling expenses to get what? NRV. Got it? Not got it? Tell no. Historical cost incurred for FG is 100. Selling price of FG is how much? 120. Estimated selling expense how much? 30. You're supposed to calculate the value of inventory. So how do you calculate? Cost price or NRV, whichever is lower. What is cost price? 100 is the cost price. How did you get this 100 rupees cost? How do you get this cost? Purchase cost plus conversion cost plus other cost. Ella seta, this is that cost per unit. In one example, we got no cost per unit, 500 and chill something we got. That chemical wala example imported from USA. What is that? Cost per unit. Purida. This is how we get the cost per unit. Now, NRV. What is the formula for NRV? Selling price minus estimated selling expenses. So 120 minus 30. 120 minus 30, how much? 90. In this, what is lower? 90. So cost of inventory is 90. Got it? Not got it? Tell no. Lower of 90 and 100, which is 90 is your cost of inventory. Since NRV is lower than cost, FG shall be valued at NRV. This I'll discuss later. Leave it. Any problem? Now what we discussed is NRV for finished goods and stock and trade. Now NRV for WIP will come. Yes or no? To be very honest, only one theoretical line is mentioned in your syllabus. There is no question based off this. Why? Because we have an in-depth discussion of this in CA Intermediate. In fact, this is the notes from CA Intermediate only. Now you have to tell me, should I discuss this or not required? This is not required at the foundation level. If you want, I'll discuss. Otherwise, not required. Because here they're telling that in case of work in progress, expenses and overheads are required to be incurred to convert the WIP into finished goods and make it ready for sale is also to be reduced from selling price. ஒரே லைன் கொடுத்துருக்கான். இது எக்ஸ்பிளைன் பண்றதுக்கு I'll take half an hour. Now, I'll try to do it in shortcut. Okay, va? NRV means what? Net realizable value. What is net realizable value? Selling expense. Net selling expenses sollama. Okay. WIP, do I sell? Do I sell WIP? So where is the cost question of NRV of the WIP? Puridha? So in such a case, you always have to take the selling price of FG. Purinjada? From this, what are we supposed to minus? Estimated selling expenses of FG. With that, what will I add? Estimated cost of completion of FG. Listen to me very carefully. I give you example of cake. We have ingredients which is called as raw material. If all the ingredients are mixed together, it become batter, which is WIP. And once that is done, baking process over, it becomes cake. Got it, not got it? I'm telling WIP stage, batter stage, we are there. Okay, va? Cake vikkumode, what is the cost price of the cake? 1,000 rupees. 1 kg cake that we make, and the cake or the selling price is how much? 1,000 rupees. But when I sell this cake, no, okay, for convenience, I'll take 1,100. So what is the selling price of the cake? 1 kg cake, 1,100. This is FG. FG na another cake. Minus estimated selling expenses of cake. To sell this cake, I have to give one commission to one person. Got it, not got it? So commission expenses, we agreed that it is a part of your incremental cost. Yes or no? Minus 100. So what is my NRV? What is my NRV? 1,000. Now, in that, FG எடுத்திருக்கீங்க. இதோட WIP to FG conversion cost will come or not come. இப்போ ஃபார் எக்ஸாம்பிள் இந்த கேக் வந்து நீங்க கஸ்டமர் கொடுத்துட்டீங்க. எவ்வளவு காசு வரும்? 1,100. From customer will get it. 100 rupees you have to pay to whom? Agent commission. So what is the remaining money in hand? 1,000. But this cake is currently at what stage? WIP stage. To convert into cake, you have to incur additional 200 rupees. புரிஞ்சுதா? So that if I minus, balance is how much? 800, which is called as NRV of finished goods at WIP stage. இந்த வெங்காயத்துக்கு தான் நான் எக்ஸ்பிளைன் பண்ண மாட்டேன்னு. Because in intermediate, we discuss in depth. I don't expect such a question to come in your examination. Not possible. Now I'll just read theoretically what they have said. In case of work in progress, expenses and overheads required to be incurred to convert the batter into cake and making it ready for sale will also be reduced from selling price. Which selling price? Selling price of FG. From the selling price of the cake, we are supposed to reduce what? The cost required, the expenses and the overheads required to convert the WIP into FG. Adu minus panno. And expenses required to make it ready for sale. புரிஞ்சுதா? In short, in the format that they're trying to say. This will not come in your exam. So do not panic. Leave it. If you understand, well and good. If you don't understand also, leave it. Got it, not got it? One more point I'll just tell and mention and leave it. We spoke about stock in trade and FG and WIP. What about raw material? Do raw material have NRV? No, because we're not selling it. We are not selling it. Got it, not got it? Now here, this part also has got little complications, which I'll discuss only in CA intermediate, because there are two scenarios. These are two scenarios. In one scenario, the raw material should be recorded at replacement cost. In another scenario, the raw material should be valued at cost. இது ப்ராப்பரா எக்ஸ்பிளைன் பண்ண வரைக்கும் புரியாது. புரிஞ்சுதா? In your textbook, what they have done, that much I'll tell you. In case of raw material, replacement cost is generally considered as NRV. This much you study and go from the true and false point of view. Got it, not got it? Ana, this is correct only to the extent of 50%. Which means what? In a particular scenario, in one particular scenario, raw material ka cost is going to be equal to its replacement cost. புரிஞ்சுதா? Replacement cost of the raw material is considered as NRV. Raw material is there, no? It's got two components. One is cost component. What is it? NRV. NRV is equal to replacement cost. This is true only in one scenario. In some other scenario, we'll take cost only. Got it, not got it. But this line I want you to by heart because from true and false point of view, it is important. They will ask a question. In case of raw material, replacement cost is considered as NRV. True or false? True. Got it, not got it. Tell no. Always. Now, if they say, in case of raw material, replacement cost is always considered as NRV, wrong it is. It is false. So one word can change your answer. Got it, not got it. Clear or not clear? In-depth discussion of this will happen in CA Intermediate. Okay, wa? Okay. So with this, I'm done with my explanation of what is meant by NRV. What is meant by NRV? NRV means what? Estimated selling price minus estimated cost of completion minus estimated selling expenses. Clear or not clear? This is for manufacturer. This is for cake. Cake order selling price is how much? 1,100. 1,100. What is the conversion cost? To convert WIP into cake, how much is the cost? 200. Commission, how much should I pay? 100. What is your NRV? 800. This is NRV of FG. This is NRV of FG. This I should compare with what? Cost of FG. Cost of FG. Got it, not got it. This small part can come as your question in exam. In-depth, complicated part will not come. Purinjada? Why less? That is pending. So cost ka meaning understood. NRV ka meaning understood. Now we will discuss why cost or NRV whichever is lower. What is the time now? 6:52. Not possible today. I'll take half an hour to discuss this point. With that, we're done with this discussion. So next class, that is tomorrow morning, I'll spend initial half an hour to discuss this topic. Then we'll break for it. Then we'll go to the next topic, which is called as non-historical cost method. Got it, not got it. Fantastic. So can we wind up? Can we wind up? No. So guys, that's all from my side for this session. I will see you all tomorrow morning, 10 a.m. sharp. Until then, bye-bye. See you. Take care. Thank you so much.